Welcome back to the channel. All right, so today we got a lot of interesting stuff to take care of. There was a big market crash. Oh my God, oh my God. No, there wasn't. It wasn't a big crash. It was a fear dip, and we're gonna get into why it was a fear dip, why exactly did this dip occur, how most people should have handled this dip, and how they shouldn't have handled this dip. So hopefully this will be information for the future, because the fact of the matter is the people that have been in this market for a while are used to things like this. When I saw this occur last night, I was so happy because everything was on discount and I bought everything I wanted to buy. And I got them at great prices. And that's really the way to do things if you are a long-term investor. If you're speculative and these things scare you out, then you're still in the learning process. And unfortunately, that's just a bad place to be. But everyone's been there. I've been there too. So anyways, today we are going to do Bitcoin, Ethereum, EGLD, and Cardano. And we're going to spend more time on Bitcoin and EGLD today because there are some new things we can put on the charts that are going to help us get an idea of what's going to happen in the near future, because this drop has given us information that we did not have before, and it's very important information to have. So we're going to use it to our benefit, and you're going to see how a drop like this can benefit you in the future if you know what to look for. Because some of the things that I'm going to be plotting out on the chart tonight, I wanted to wait to do this live in the YouTube video and live stream, because if I do this live, then it really shows you how I do it. Whereas I was just looking at the charts and I was seeing these lines in my head, but now I'm going to put them in so you can see that. Make sure you like, make sure you subscribe, make sure you go to the description, check out my Twitch, follow me there, follow me on Twitter. You'll see important stuff on all of them. So just join the community. It's fun. It's fun for all of us. We like it. And we're going to go ahead and kick this off with Bitcoin. All right, let's do this. All right, so Bitcoin, first thing we see. All right, we had a top at about 64,900. We were just shy of 65K. Now, the first thing that we want to look at when we're looking at this drop is what was the entire drop, and then what was the specific drop itself. So if we look at the entire drop, we're going to look from the top to the bottom. So if we look at that, this was from the 65K top to the bottom. This took us down about 21%, 20.98%. That's a pretty massive drop. Now, if we look at just the specific time that we had the major drop to now, it really started around this area, because this is where we were moving up. Then we had a drop, we had a little bit of buyback, and then we plummeted. So I'm going to take it from this point here, and that is about 17%. So it's only 3% shy of the 20, which is basically telling us that this is, in most cases, going to be considered a 20% drop. That's how the media is normally going to consider it, but we really need to know why this occurred. So we're going to talk about that first. The first thing we do is talk about why this occurred. Once you understand why it occurred, we're going to come back and we're going to use the data that this drop has given us to chart out some new lines so we have more patterns to look at for the near future and can make better decisions. Okay, so I'm going to jump over to this Twitter post, all right? This is something I posted. This is why you need to follow me on Twitter. This is something I posted on Twitter last night after I saw a post from Willy Woo. Willy Woo on Twitter is at Woonomic. That's at WOONOMIC. You definitely need to follow him. He posts a lot of good information. He's an on-chain analyst and a very, very smart guy that's been in the blockchain analytics game for a very long time. So everything that he says, you really need to add it to your research base. It needs to be part of the information that you're using to make decisions. So if we look at what he posted, this was 16 hours ago that he posted this tweet. He posted here, price and hash rate has always been correlated. This is the Bitcoin price versus today's hash rate collapse from the Xinjiang blackout. Now, what he's talking about is rolling blackouts that occurred in China that affected a lot of Bitcoin miners. The effect that that had on the hash rate for Bitcoin, which is basically the processing power of the Bitcoin network, paints a pretty interesting picture. So keep in mind, he says price and hash rate have always been correlated. Okay, so the price of Bitcoin and the hash rate of the network are always correlated. Okay, so there was a hash rate collapse and then there was a price collapse. So let's take a look at this post in a little more detail. I'm going to go ahead and switch us into full screen mode so you can see a little bit better. I'm going to zoom in on this so you'll be able to see it really well. Okay, so what we're going to do here is we're going to click this button, and this is going to zoom in on the chart. Now, when you look at this chart on the right-hand side, in case I cover it up a little bit, we'll move it here. We'll actually see, maybe we can move me out of the way. We'll move me over to this side. Okay, that might be a little bit better. Okay, so if we're looking at the right-hand side of this, the thing that you want to look at here on the right-hand side is basically that at this point between April 15th and 17th, so at around the 16th, so the day before yesterday, okay? So pretty much a little bit before the crash occurred, we saw that the hash rate had a massive drop. The hash rate just plummeted. I mean, if you look at where the hash rate was for such a long period of time, the Bitcoin hash rate dropping this low is essentially correlated to the security of the Bitcoin network dropping, because the lower the hash rate, the less secure the network is, the less nodes are verifying transactions. So when you have a drop like that, it puts a lot of fear in a lot of investors, especially investors that have a lot of money that look at things like the hash rate all the time. They have access to Glassnode. They're looking at the hash rate on different chain analysis platforms, and they see this occur. They see it as a sell signal. I got to get out. There might be a big crash. So we saw a big drop in price right after the hash rate dropped. Now we saw that the hash rate started to recover and the price started to recover. Now let's move on to his next post. Okay, so if we go to this post on Woonomic, we see that he has a number of different charts in his thread. So we're going to look at the next one. The next one says, for those who remember the hash rate collapse of 2017. So in this view, what you're seeing is the hash rate collapse that occurred in 2017. You saw here in the orange that the hash rate dropped massively. That correlated with a massive price drop, and then the hash rate bounced and the price bounced. And not only did the price bounce, but once the hash rate stabilized, the price of Bitcoin continued moving up. That's when it crossed 10K in 2017. Okay, let's move on. Now we're going to take a look at the next chart. It says this is the latest hash rate data by Glassnode with a 6-hour moving average, already nearly fully recovered. So we take a look at this. This chart here is now showing us that the hash rate drop occurred here. Then you saw the hash rate come all the way back up, but the price has not yet recovered. My friends, what this is telling us is that if this drop was correlated with the hash rate drop, which it seems like it was, then the price should have already recovered to where it was and actually surpassed it, but it has not yet. Now, what does that mean for any potential buyers of Bitcoin? It means that right now you are getting it at a discount. That discount will not last forever. The recoveries from events like this tend to be fairly rapid, and once they recover, this is considered one of those inflection points where it creates a massive discount, and what happens during this discount is that the weak hands sell. The ones that are not holding long-term, they sell. And then the people that are getting it at a discount are usually stronger hands, meaning that you're going to see less sell pressure and the price is going to be able to move up a lot more stable. It's one of these events that tends to happen. It's happened in previous years. We're going to continue seeing things like this happen, but when it does happen, knowing it and taking advantage of it is very important. Now, why did you see the altcoins crash? Well, because when Bitcoin saw a massive drop like that, it scares everybody. A lot of people talk about how altcoins seem to be uncorrelated with Bitcoin right now. That's not true. The altcoins are correlated, but they're not always going to trade the same. But if Bitcoin crashes, you will most likely see a crash on everything else. Now, in reality, you can't even really consider this a crash, right? Because a crash would take the price down to some unseen level that we haven't seen in a long time. The price is back to where it was less than a month ago. That's not a crash. Okay, this is a fear dip. This is people getting scared and selling, and those are the weak hands. The stronger hands, like myself and probably many of you, bought the dip. If you buy the dip, you are getting it at a discount. I was buying at 61K. I was buying at 60K. I bought at 59 before it crossed 63. And I've also bought at 55 when it dipped yesterday. And I was happy to buy at 55. That was awesome. I didn't know if I would get that opportunity again. And, you know, when we get to EGLD, I'll tell you what I bought that at. I got an insane deal on EGLD. Okay, so now we're going to move on and see if he has another chart here. He says, okay, he added this 8 hours ago. He said, just adding this chart for people wanting to see the correlation. Today was the single sharpest one-day drop in hash rate since November 2017. So this is November 2017. Oh, no, sorry, it's not. So this is 2018 on the left, and on the right-hand side, we're coming into 2021. So we see here that the hash rate dropped. We see here that the price dropped. Okay, this is the mean hash rate. This is the average hash rate. So the hash rate dropped, price dropped, and now what we are going to see is that you already saw that the hash rate has recovered, and we are going to expect to see the price to recover. So this one's really key here because this is that updated Glassnode data on a 6-hour moving average, and it's showing you that within a very short period of time, the hash rate recovered, you know? So you can only anticipate that if the price dropped because of the hash rate drop, the price is likely going to recover. I would be very, very curious to see how quickly it does and how strongly it does. So we're going to have to check that out. That is mainly why this occurred, okay? So this is on a technical standpoint. Why did this crash occur? Why did it affect the altcoins? You just found out. Now, as far as anything else that could be part of this, one thing that people have been claiming in the media is that because a lot of the stakeholders of Coinbase sold their shares, that is a bad thing, that these people are just selling all their shares, they're liquidating, and they don't believe in Coinbase, so they're selling, and you know that's been spun by the media to scare people. And I'm sure some people saw the crash and had no idea it was because of the hash rate. They thought it was because of Coinbase, and they sold too because those were weekends as well. Cascading effect. Now, the fact of the matter is that Coinbase didn't do an IPO. Coinbase did a direct listing, and when you do a direct listing, you have to have some people selling shares so that other people can buy shares. You know what I mean? Like, there has to be a transfer of wealth between the existing shareholders of the company. They are the ones selling, the investors are then buying. It's very normal with a direct listing, right? People are just used to IPOs, so they don't really realize that hey, it's not shocking that Coinbase's owners and stuff are selling some shares so that other people can buy them. So I didn't really understand the logic of people spinning that in the media. It makes perfect sense that people at Coinbase that have shares are going to be selling them. Some of them might have sold 95, 97%, and that's fine. Why? They're stakeholders in the company. They want to sell, take a profit, and diversify their investments. Why not? They can do whatever they want. So I would have no fear with the Coinbase thing. I would just keep watching that. In my opinion, I think the Coinbase stock over time is going to do immensely well. I think it's going to probably be over 1,000 at some point in the future, but I still likely would not want to invest a ton of money in the Coinbase stock versus Bitcoin because I think super long term, like 10 years, Bitcoin has a much higher upside than Coinbase. Coinbase is going to get limited at a certain point, and they're going to have a lot more competition over the years, whereas Bitcoin is in a completely different game by itself. So anyways, I don't think the Coinbase thing has anything to... There's no reason anyone should fear that, but that combined with the hash rate thing has really scared the heck out of people, and it resulted in what we saw. Okay, so now you have that. The backstory is done, and now what we're going to do is take a look at the Bitcoin chart and really see what does this mean. Okay, so when we look at this, we see a couple of things very, very clearly. We see the first thing is that we are still putting in higher lows. The low here is not as low as our recent low is still higher than the previous low. That's a good sign. That means we still got support at the previous low. We didn't go below it. That's really still showing upwards price momentum, right? It's a bigger drop than we would have expected to see, but you can't tell what's going to happen when the market just goes into a burst of fear. Things like this happen. But I'll tell you what, the fact that I was able to buy like right here, literally right here during this drop, I'm happy with that. You know, I didn't think I'd get to do it again, but I managed to do it. So great for me, great for anyone else who managed to get in low. If it drops even more for any reason, then I'd be more than happy to buy more. So we'll see how things go. But for right now, I think it was a blessing. Okay, now we are going to add a few more lines here. The first thing I'm going to do is add a line of resistance because now we definitely have three tops. We have one here, we have one here, we have one here, and we can clearly draw a new line of resistance that may give us a new trend. So the first thing I'm going to do is I'm going to switch this to a horizontal ray. And what we are going to do is we are going to create that ray. Actually, let's see. Can I do a ray? We'll do that kind of ray. Okay, so we're going to create a ray here. This is going to be a resistance line, and I'm going to get each of these tops within that resistance line. Okay. That's a pretty decent area to put it. Now, the reason I'm putting it there is because I'm just going to consider that this top went a little bit above, but it still fell below. It catches this top here, and it catches this top here. I'm going to zoom in a little bit so you can see this a bit better, okay? All right, so we zoomed in a little. You can see the new line I put in is this one here. Now I'm going to get rid of a couple of other lines. Okay, we no longer need this ceiling line anymore. We'll hide it. We kind of don't even need this line anymore, so we'll hide this one. Okay, and what we will do is we'll take this line, we'll change the color to purple since we don't have a purple line right now. That's a little too dark for you. You can't see that. So let's make it brighter. We'll make that one yellow as well since it's another resistance. Okay, so we got that resistance line in. Now I'm going to create another line. I'm going to create one at the bottom that follows where we got all the support. All right, so this is going to be a new support line. We're going to create one going in this direction. And I want to do the same thing. I want to catch the bottoms and I want it to hit this new bottom here where the support seemed to be. So when we came back up, we got a decent amount of support here, and this captures all three. This drop came in exactly where it was. This drop touched the line. This went below the line and then came back in and got support. So this is a decent area to look at for right now. Now, when I look at these two lines, what I'm really seeing now when I zoom back out is that it is giving us a potential new trading channel. Now, this trading channel might get modified, right? Depending on if we keep trading to the right, then I'll be able to modify this bottom line and make it a bigger channel. But right now, it is putting us in this wedge pattern that if it continues to trade in this and get constricted, we're gonna expect a big move somewhere around here. You know, this is going to be towards the end of June. If we're still trading for any reason around 70K by May and June, which I think it's much more likely that we trade more like this, that we come in more like that and set a new high, and then we go back into this trading channel here. But just in case we don't, we have an area to look at. We also know we're going to see resistance at this line. We should see support at this line. So this is at least going to give us a new support and resistance channel as we keep moving, and we'll modify this later if we need to. I may come back and change the colors, but this is one thing you can do when you have a move like this. You use the data and you get some new targets. And basically now what I really want to see in order to see insane bullish momentum is I want to see the price start moving this way, and I want it to break out of the top of this and break back into the red channel. All right, so that's really key. What I'm expecting to see with Bitcoin now is I'm expecting to see sustained uptrend, slowly moving up over the next week and seeing it go back into the 60K within the next couple of days. You know, 3-4 days maximum. I want to see it back at 60,000. I think that's a very small goal. I think as the week goes on, you're probably going to see that the media is going to try to spin this really bad, and that may result in a slow move, maybe a little bit more selling or sideways trading at between 55 and 57. But after that's all done, we're going to see it start going back up and working its way back up into the other trading channel. So we'll keep an eye on those things and we'll continue watching the chart. But for right now, you should be looking for good buy spots. And honestly, I think where it sits right now at 56K is a great buy spot for Bitcoin. And, you know, anything lower, you just kind of have to figure out what's going to work for you. I have trades sitting at 50,000 just in case if it drops that low. I don't think it will, but I have an order sitting there. If I get lucky enough that it drops there, then I want that order to trigger whether I'm asleep or awake or whatever. And we'll see what happens. But that's kind of what I'm looking at. I'm looking at upwards movement right now, and I'm looking at a new channel that we need to follow and break out of. All right, so we got that down. That is Bitcoin, and keep another eye on the RSI because right now Bitcoin went massively into the oversold territory. And honestly, the RSI at this level being where it is awesome. And if it goes up slow, if there's a very slow uptrend and this RSI, if the price can go back to 60K and the RSI can stay at around 45 or 50, whew, that's going to be amazing. So keep an eye on things. Bitcoin's looking really, really good. It's getting a lot of support where it is now, and it's looking like it's going to start its upward motion again. So keep an eye on it. Be ready for the drops. Have your orders ready. Have your risk management strategies ready, but be expecting that this drop will not last long. Okay, it's going to be short-lived. All right, let's move on. So we are going to go back to our normal view. And hang on a second, I was still on full screen. Okay, so you actually probably didn't get the best view because I was not on this view here. But here's another view of it. I'm going to show you those lines again. So basically, that's the new trend that we're looking at. Okay, we're looking to see if we follow this trend or if we break out of it. That's what we want to see. Okay, now we are going to go over to Ethereum. With Ethereum, we basically saw a very similar thing happen. We saw a big drop. It got a lot of support, exactly where we would have expected it in this support area before at the 0.5 on this Fibonacci line. And this was around 2050, right? Around there, 2040. Got a lot of support there, and it's worked its way back up to 2200. So you would have had a massive, amazing opportunity to buy at these levels. I still think Ethereum's a great buy where it is now, because honestly, it was going very strong where it was, and a fear dip usually recovers pretty quickly. So this could be one of those trades that if you're in, if you do your risk management right and you believe in Ethereum long term, seeing a 12% gain from this over the course of a week or two is very, very possible. And I mean, most stock investors hope for a 12% gain in a year if they're lucky. And with Ethereum and Bitcoin and EGLD, like a 12% gain right now could be within a week. It's massive opportunity. So Ethereum, I'm not going to go over everything because it's looking very similar to Bitcoin. I'm actually using a Fibonacci here, so we already have support and resistance level. Fundamentally, nothing has changed with Ethereum. Targets are still roughly the same. I'm still expecting an upward movement, and I'm looking to break back above 2,500, which is where it was working before this drop. So Ethereum's still looking good, and honestly, this was probably a very, very good thing for Ethereum, because Ethereum needs to build more support in this entire range on the way from basically 2,100 up to 2,500, and now on the way up, it's going to get a chance to add a lot more volume in this area, and that's going to make it even more bullish once it gets back up to 2,500. Keep an eye on it. Ethereum's looking good, but I'll be honest with you, Bitcoin's looking better. But either way, Ethereum is looking good. All right, we will now move on to EGLD because we got to do some similar work on EGLD. Okay, so let's actually go to the other EGLD chart where I do all of the lines and stuff. So on this EGLD chart, the first thing I'm going to do is I'm going to hide this old triangle. We don't need this anymore. All right, and as we move into EGLD, we will also see that this area is still quite important. So I'm going to extend this box out. All right, we're going to unlock this box, and we are going to take it and we are going to extend it. Now, the reason I'm extending it is because we have set such a massive support level in this range that even where we're trading now, you can see what happened during this drop is that we went into this support box and we bounced right back up through it, meaning that we had a ton of people waiting to buy at this 140 range, and that's where we were stuck for a very long time. People were ready to buy there. I actually bought right in between it, like close to the bottom of it at around 136 is where I picked up my EGLD at a few levels. I got some at 195, 180, and then all the way down at 135. So basically, I saw that on my phone. I got notifications that my 195 order triggered, my 180 order triggered, and when I saw that, I was like, what's going on? And I signed on, and I immediately saw that EGLD was in the process of dropping. It was dropping as I was looking at it, and I immediately did a spot buy, and that buy closed at 136. So, I mean, because I got on at the right time, I had notifications set up, that has already been a trade worth 38%. I mean, you can't really, doesn't really get better than that, right? So I'm very happy with that. I didn't think I would ever get to pick up EGLD at that level, especially now, but this is what fear dips do, and you got to be ready to take advantage of these if you understand the projects that are worth getting into at these prices. So I was happy to do that. I'll be happy to do it again if we get lucky enough to see some more fear cause another drop, but right now it's looking great. And with EGLD, we have a couple of things that we need to do as well. We need to create some more lines here. So we're going to do the same thing. We're going to create a ray. We're going to first do that ray at our tops. Okay, I'm going to get both of these little tops here. I'm going to put that in the ray, and then I'm going to come to this area. I'm going to move it down a little bit. Okay, so we have that ray in. Now what I want to do is I want to create another one, and this one is going to be at the bottom where we've seen massive support the entire way. So when I create this one, it might actually be easier for me if I do this for you on the daily chart, because if I do this on the daily, you'll be able to see it a lot better. Okay, so we're going to create the next one here on the bottom. So when we do this one, basically what I'm going to do is I'm going to try to hit as many major areas as I can. So I'm actually going to start all the way down here, and I'm going to work my way up. Now, as I'm going here, I'm trying to basically hit the areas where this is coordinating with a lot of the other areas touching this line. So this seems to be a good place to do it. Now, the reason I'm doing this here is because I have touches with this drop, I have a dip below with this drop that went down to the moving average, and now I also have an area here where it touches the most recent drop and a big wick below it. I don't need to go to the bottom of the wick. That's not always the best place to look at, because when you wick somewhere and you recover very quickly, it means that it got oversold. You don't necessarily need to put that in your trend line, because not always going to get oversold. Okay, so now we can go back to the 4-hour chart and we can take a look at how this looks here. You can see by doing this, it's actually created the line right where the big candle came down, and we had the second wick. That's a perfect position for it. It goes all the way back and shows that this same line, we hit resistance on it at this portion here way back when EGLD was trading for 73. We also hit resistance on it when EGLD was trading at 41. So there are multiple areas where this line has proved to be important. Okay, all these different areas have proved to be an important area for EGLD. Now, because of this, it tends to give you a higher probability that this line is going to continue to be important. We've also seen that this line here has hit resistance once, actually 3 times. So there's 2 times here, 1, 2, and 3. Okay, so those 3 times we've hit resistance on this top line. Now, putting the resistance channel there is also giving us an area where we can expect to see more resistance on the way up. So if we look at this on a much bigger frame, basically what we're seeing is the inflection point sits somewhere around here at around 300, and that's if the price is not breaking out of this by June or July. So it gives us a very long-term goal if we keep moving in this trend. But basically what we're looking to see with EGLD now is something very similar to Bitcoin. We're looking to see the price come back and trade within this channel for a little while, maybe a week or 2, maybe less, and then break out. Once it breaks out of here, we want to see this flip as support. As soon as it does and it keeps moving, you'll see you'll suddenly have new trends arising. And these trends will be able, I mean, those lines are terrible, but those trends will be able to give us a much more ascending pathway so we can see where it's headed. But right now, for the short term, this is what you can expect. So any drops that you're looking at to purchase, you know, your probably best bet is around 160, you know, as a low. I don't really see it going below that because it got bought up so quickly when it went below that the last time. So if we zoom in now again and you take a closer look, you'll see what I mean. So when we zoom in here, you'll see when it went down and dropped all the way from 124 back to 162 were bought up super fast. So that tells me that if the price was to drop again, it very well should flip 160 as support, and we shouldn't be going below it again. Right? Unless there's some massive fear coming out again that causes us to go below it, I think that 160 is a great place to buy EGLD right now. So if I was to set any more orders for EGLD, which I probably will, I'll probably have one sitting at 160. And I like to put some lower just in case. So I'll probably put another one at 150, maybe even, actually 150 and 160. I don't think I'll put it lower. I would rather have the money liquid at that point in case I want to buy something else. But yeah, that's pretty much it, what I'm seeing with EGLD. There's nothing much to tell you except expect big things. The Maiar exchange is coming very, very soon. That, in my opinion, after it goes live and people see the functionality of it, it's more than likely going to bring more people in. There's going to be news articles about it. You're going to have YouTubers talking about it, and you're likely going to see the price react to all that information start flowing, to that network effect starting to take place. So keep it all in mind, expect things to happen, so plan your trades accordingly. I don't think you have a ton of time left if you're looking to get into this at low prices. Yesterday may have been the golden opportunity if you were able to take advantage of it. And honestly, I think even now at 190, it is a pretty great buy, because if you look at the top of 234 to or let's say 243 as the top, then right now you are getting it at a 21% discount. And I truly believe that it will be crossing 240 sooner than later. I mean, it wouldn't shock me if within 3 days it's crossing 240 again. That I wouldn't be surprised in the slightest, right? That wouldn't be great for the RSI, because the RSI would move up very quickly. Ideally, if it has a move like this going up and it takes all the way until May to go up, the RSI will look beautiful in that type of move. But I don't think we're going to be so lucky with the Maiar exchange coming out. I think the price is going to move up much faster. So if you are someone who's been wanting to get in the EGLD, make your decision soon and make sure you know what you're doing, because remember, an asset like this can always react sharply to bad news. So you have bad news in the market, you can see a massive drop with an asset like this. So you only want to be involved in EGLD if you believe in the project, you've read about it, you know about it. You know, you don't want to buy it and sell it immediately and just take a loss. It's not good for you. It's not good for your taxes. It's just a bad feeling. So, you know, keep it in mind. I think that it's a great investment. I think that it's a smart investment, but I also always tell people I could be wrong about anything, so you can't take my word for it. But you got to do your own homework. You know, use this as a resource. That's all it is. All right, that's everything for EGLD today. I'm going to be doing a lot more work with this chart. I've started looking more at Fibonacci circles. We did it in my live stream. I was answering a question about the fact that the EGLD chart is looking very symmetrical. So I put on some Fibonacci circles and explained those. And I started to realize that nobody really uses those in YouTube TA. So I may actually do an episode where I analyze EGLD with the Fibonacci circles, so you can learn how to use those and see some additional patterns that you may not see all the time, right? And I'm probably also going to add a Fibonacci retracement to the EGLD chart. So the next time you see in this EGLD chart, there's going to be a lot more stuff on it, and it's going to give us a lot more information. I'm not going to do all that live because it's going to take too long, and I want to get all the numbers perfect. So that's pretty much it for EGLD. Let's move on to ADA, and that's going to wrap it for the day. All right, so with ADA, you'll see that the one thing that's amazing about ADA is not only did it have a massive drop, but the recovery came all the way back to 130, which is where it was just about a week ago. So it's basically already recovered. It had a spike from here, but to be honest with you, I would consider this recovered, because it is now already in the place that it was a very short time ago. It got massive support at the area where it had put in a lot of trading volume. I mean, if you're going to see a fear dip, this is how you confirm it's a fear dip, because it never stayed below its main trading area for a long period of time. As soon as it went there, people were buying again. It came right back up, and it is stable where it is, and it's really looking good. I hope, like everything else, it moves slowly, but I'll tell you, I've seen these fear dips before, and they tend to recover fast. So it's all about taking action at the right time. I can't really say anything negative about ADA right now. The only thing that just off the surface looks slightly concerning is that you're seeing the blue moving average start to go below the orange. So that's the 20 EMA has crossed the 50 EMA. When the 20 exponential moving average crosses below the 50 exponential moving average, that's a bearish signal. But you're going to start seeing this on all the charts because of the fear dip. So the question is, why did this bearish cross occur? And did it occur because fundamentally there's something going on with the asset? No, this kind of occurred on everything because of the reasons we talked about earlier, which means that this is kind of a false flag right now. You still got to take it into account because these are quite accurate as far as drops go. But if the price recovers and you see the blue moving average cross over the orange, and this goes for other assets as well, this is going to be a bullish cross. If you see the bullish cross occur, you don't have much time left before the price goes up. All right. Keep it in mind, not a lot to talk about with ADA because I'll just be repeating what I said for the others, since a lot of assets saw the exact same type of price movement. But, you know, you saw me do trend lines and stuff and pick up trend lines and create new trading channels. You can do the same things with this asset and you can get good numbers. Right now, I'm not doing it because I think that the levels we're looking at are still perfect on this Fibonacci, we hit below this green line and we wicked up immediately. We hit resistance at the red line. We're right above it. We need to flip it as support, and then we need to break out above this line at $1.50. All these support and resistance lines on this Fibonacci retracement have been insanely accurate since the time we created this fib. So I'm going to keep using this fib until it's inaccurate. And right now it's too accurate to get rid of. So keep an eye on things. ADA is looking good. I mean, honestly, there's nothing scaring me here about ADA. I'm staking my ADA. I haven't sold any of it in, I don't know, 6 months. I've only accumulated more. And, you know, I would accumulate more right now, to be honest with you. I would. But right now, I feel that for me, the better choices are EGLD and Bitcoin. So that's what I'm accumulating right now. Anyways, that's it for today. Make sure you like, make sure you subscribe. I hope you found this insightful and useful. Ask me any questions in the comments. Make sure you join me on Twitter and Twitch and turn on the alerts and stuff. I think that's it. Have a great night. Peace.